Hello everybody, today we will discuss the process that we use in order to select the companies or stocks that we will further analyze with the 3-block system. This will be a short video, let's get right into it. There are over 40,000 listed companies around the world. Just in Nasdaq, we have 3,300 companies and 2,800 in the New York Stock Exchange. Taking out the dual listed companies between Nasdaq and the New York Exchange, we have around 5,200 companies that we would have to analyze every year in order to know what we want to invest. With 52 weeks in a year, we would have to analyze around 100 companies per week. That would be 20 companies from Monday to Friday each day. Good luck trying to analyze that many. We develop a system that we're sharing with you so we don't have to analyze 20 companies per day, but just a few of them, and keep beating the market. Let's go and check it out. This is the Excel file that we use in order to analyze the stocks. Excel has a nice function called stocks in the data area. We recommend you to use it. It is nice and it is free. Our stock analysis requires the following information from all stocks. Their ID, which we give it to the stock, is a unique ID, the stock name, the earnings report date, the market cap in $1 billion, the year that it was incorporated in the stock market, the P/E or the price to earnings ratio, the rank, we're gonna get back to this in a bit, the return on assets, the return on assets rank, and the position when we sum both ranks. We sort them by the earnings report upcoming date, since the sharp drop that we're looking for usually comes right after this report. The reason is that the market tends to overreact, either by buying a lot or selling a lot. Let's take a look at Activision Blizzard. We made a video on the 2nd of November regarding this company. We explained that on the 4th of November we were going to get the earnings report, and unexpected there was a sharp movement during that day. How sharp, you may ask? Let's see the graph. As you can see, there was a drop of about 12.6% the day the earnings report was scheduled to be out. Before you get the wrong idea, this does not mean that every time there will be an earnings report, there will be such a movement. Nevertheless, history has shown that these movements happens quite often. Now that we saw this example, let's go back to our Excel file. In this table, there might be companies that you already know, same as others that you might have never heard before. Some common companies that we have are Tencent, PayPal, Berkshire, and Alibaba. And by common, I mean those that you have heard before or most likely know them. Every company, regardless that we know, regardless if it's famous, regardless if it's always in the news or it's never in the news, have the same treatment at this point. As long as it has $10 billion in capital, and as long as we know the year that it was incorporated and that it was before 2008, then we can actually analyze it in the 3-block system. Nevertheless, some companies such as Black Knight in 2017 or Oil Search Limited in 2020 are in this table because we have not cleaned it yet. We will do that in future videos. Using the stock tool of Excel, we can get most of the information, such as the market cap, the year that it was incorporated, and the PE of the stock. As for the earnings report date, we obtain that in tradingview.com. And for the return over assets, we have two ways of calculating it, either by ourselves or we use a different webpage, which is the one that you can see in the screen at the moment. The system of summing the PE and the return over assets comes from a book called The Little Book That Beats the Market, or in newer version, The Little Book That Still Beats the Market. I can't emphasize enough how much do I recommend you to read that book. Out of all of the different great concepts that it has, there is one which strikes me the most. It uses this simple technique where we can rank any sample of stocks, could be 10, could be 100, they could be all from one country or all over the world, by their price to earnings from lowest to highest. As you can see, the lowest PE out of all of the stocks is by POSCO. Therefore, it obtains the rank number 1. Whereas we can see the trading desk has a PE of 136. Therefore, it has rank 16. Other companies have an X because they do not have a price to earnings because they had no earnings. After we rank them, we do the same with return of assets. For those that do not know how to rank in Excel, it's quite simple. You just have to grab all of your table and you go to sort. You go to custom sort and then you can rank whatever you want. In this case, what we want is from the PE. We want it from smallest to largest, and then we have them. We have the X first because it's 0, and then all of them from 1 to the rest. The same thing would be with the return over assets. We would grab the whole table, we would go to custom sort, and then from return on assets from 2016 to 2020, because we want the 5 years. Here, as you can see, we would also rank them from first to last. Again, those that are in negative will have an X. After that, we have to sum the positions. So for example, Trex company, it is the one with the highest return over assets, and it has a PE that give it a position of 14. When we sum them, we have 15. Same goes with TLK, JKHY, and so on. At the end, we will sort them again, but now by their position. After having that, we know which are the companies that we will pay attention to before starting to analyze them. In the top 7, we have TLK, Alibaba, Berkshire Hathaway Companies A, Jack Henry and Associate, Activision Blizzard, Berkshire Hathaway, and Tencent. We will wait to see if there is a big drop or not during their earnings report date. And if what we have is a drop, then we will analyze them with the first and second block. We continue this process every day with different stocks in order to analyze them all and make the better purchases. There you have it, folks. That's the table that we use in order to narrow down the companies that we will analyze in the future with the 3-block system. The takeaways of this video are very simple. First, read the blue book called The Little Book That Beats the Market. When you're gonna analyze a stock, you must know the earnings report date, and you should also consider making a table with their PE and their ROA in order to rank them and narrow it down. As always, thank you very much for watching this video. Don't forget to like and subscribe if you're seeing this in YouTube or if you're seeing it with the exclusive content of Patreon. Wishing you all an excellent day. I am out of here.